All right, good. I myself am recording. Okay, on Oniba. So now, what I'm trying to say is this: how do you backtest? Firstly, you need to have a strategy in order to backtest. When you have a strategy, you will now go back and try it in the past to see how this strategy performed, so you can collect as much data as you possibly can. Backtesting is simply collecting data from the past so you can see how it actually works to know if that strategy you're using is worth following or not. I want to go to a chart without any form of analysis, so we can keep everything clean and good. So let's say Euro USD, something I have not used in a while. Okay, let's go with vintage market. Right now, based on the intermediate training that we did, there I showed you guys the moving average, how you can use the moving average and the market trend to get yourself the market trend to get yourself a trading bias. Now you understand what I mean by higher highs, higher lows. That establishes a characteristic feature of an uptrend, and then lower lows. That is a characteristic feature of a downtrend, and then a ranging market is just where the market is going choppy up and down within a range. Now, when the market is ranging, as a true trend follower, you don't want to trade that market. You only trade the market when the market is not ranging. All right. Now, how do we pick ourselves a trade? We went back to the past. Moving back to the past, this is on a free trading. This is on a free trading view, by the way. You don't need a pro feature to backtest. All right. Although using a pro feature can give you seamless ways of backtesting, but here's how you do it on the free one. You simply go back to the past. Right now we are at we are still in we are currently at April 2024. We can all go all the way to January 2024. Let's say this is a good start, okay? This is a good start. Now, this is where we are currently. Let me say this is the current time frame. We don't know what the market is going to do. Let's zoom it a little bit in our chart. Looking at what we talked about, here we got a crossover to the upside. Previously, the market was trending downward, if you can notice from here. Right? This is a downtrend, true or false?
True, sir.
Now, the market was trending down. According to the moving average strategy, someone could buy this sell from here. But then I also remember I said if the market, the price is above the 200 moving average, then that market is still trending upward and you don't want to take a sell market just yet. So that could be what you do, and you choose to wait for it to break below the 200 moving average, which acts as a dynamic support and resistance level. This is just on the strategy. No matter your strategy, how you backtest, you just go back in time past. You know your entry card, you know your entry reasons, you know your stop loss, and you know your target. You just keep playing it out in the past and keep moving forward to your current time frame. From the time you started to the current time frame, you collect enough data, and then that data will make you know how many times you lost a trade, how many times you win a trade. Then you know if that strategy is a good strategy. You can even get to the point whereby you tell yourself, okay, at what point, what time frame in the day was I getting good trading entries? Then you can know the time zone you want to be trading. Okay, because all right, I will focus on Euro US, I will focus on the US session, I will be focusing on London session, all these things. You can get this data by testing. All right. I hope I'm not being too fast.
No, sir.
You're not sure. That means I am being fast.
No, sir.
Okay, so let me take it down. When you backtest, you get to pick up analysis, you get to pick up data from that your strategy. The data you pick up will now help you trade better in the future comfortably after you've backtested it. You will backtest it, you will find out what time frame this market was very active, this strategy was very good. You find out your you find out your winning ratio, and you will find out, for example, on average, how many risk to reward ratio is this trade giving to you, so you know what to stick to. Now, in this case, we have a strategy, Friends Forex intermediate trading strategy. Now, let's try it out and see. And it says, wherever we get a crossover this week, we want to sell, but we don't just sell yet. We sell only when the market has broken below the 200 moving average. Now the market is telling us to sell. It's at the 200 moving average. We're not going to sell yet. We want a break. And what confirms a break is when we see two candles in that direction. We want to see a healthy looking candle, not just one, but at least two or more candles in that direction. Right now, we got the market using the wick. This was never a break. It did like it want to break, it came back to close inside. Did like it want to break, came back to close inside. You can see this very clearly, right?
Yes,
So
sir.
this here was never a break. It kept on tapping this zone. Of course, this is a demand level, is a dynamic demand and supply level. This 200 moving average. So all these multiple taps was not a coincidence for us. And if you look at the time when this was happening, this was from 3 p.m. all the way till the next day. The next it took 24 hours, almost 24 hours, this movement, because this is on a 4 hours time frame, of course. All right, this tab kept on moving on. We kept on doing. This is not a break. The candle broke in. The next candle was a bullish candle which moved up in. This is not a confirmation. This is not a break. We want to see two consecutive candles in that direction. This is not a break. So the market kept on going. Now it came to the zone. All right, it came to the zone. It gave us a tweezer top, a very good engulfing candle, a very good bearish candle, but yet again, this is not a confirmed break because this previous candle was not a break. Here we got ourselves a very good bearish candle that broke it in. The next candle was a bullish candle. The second candle was a bullish candle. Buyers are still pushing and participating in this market. It is not giving us a conviction to trade. Now, this next strike, the market came back to this moving average here. We are still observing this is not a bearish engulfing candle. This is not strong enough to sell. Although some traders will sell at this point. All right, some traders will take the sell at this point. The market is doing what it's doing, and eventually it gave us another break. It took some time below, still spiking. At this point, you see the market is ranging. It has not given us a clear trade entry on our analysis, but that is something we tend to do. If we're on a 4 hour time frame and the market is at our point of interest, we tend to go down lower to, for example, a 15 minutes time frame to see if we can find ourselves a better entry of that trade. Now, if we're to go down lower in the 15 minutes time frame, we just might have found ourselves a better entry on that trade. But let's just say we're just sticking to this 4 hours time frame, which is a limiting way to trade, by the way. You should use multiple time frames. You make your analysis on a higher time frame and then you take your entry on a smaller time frame. For example, you're analyzing on the 4 hour time frame, you take entry on the 15 minutes time frame. All right, that is the better way to go about
Yes,
it. Now, let's just do that for trade's sake. Let's do things right now. Remember, we're currently at January 2024. Let's go down to the 15 minutes time frame, January 2024. This is going to take a long time moving backward, but no problem. Let's be patient. Because of the noise, you can mute your camera, your mic, and when you want to speak, then you mute yourself because of the noise from the background.
okay.
Okay, there is a limitation to how far you can go on the 15 minutes time frame, especially on the free plan. We can go only 500 bars no matter the time frame. You cannot go below 5,000 candles on a time frame on a free plan. Not a problem. Let us stick to that. Okay? Can you hear me? Hello, sir. Can you hear me? All right. Yes, I believe you can hear me. You can just wave your hand so I can know you actually hear me. All right. Coming out to make sure we are where we are. Vintage. Yes, vintage. Went down to April, I believe around April 2024. Yeah, this is January 2024. All right, still on the 4 hours time frame. Normally, a very good case scenario is this: you make your analysis on a higher time frame, you take your entry on a lower time frame. Because of the fact that we are using a free plan, it's quite limiting. We are not able to go lower on this time frame because of it was limiting us to how many candles we can move back on a time frame. On TradingView, we can only move back by 5,000 bars or 5,000 candles per se. All right, because of the fact that it's 15 minutes time frame, we could not move that all the way to the time frame we're looking for, to the year January 2024. But all the same, the market here, this is where we are at. The sellers are still pushing this market, obviously, because the moving average is telling us to sell. But we're looking for the best entry to take our trade that will give us a high risk to reward rate, that will give us a high win rate. All right, because when this is done rightly, you should be getting an average 70% win rate, and that is all you need to be a very profitable trader. All right, so now that being said, this is what we have here. We're still observing the market. Remember, most of trading is all about waiting. You have to sit on your hands and wait. From what we talked about on individual trading, right now the market broke again, spent a lot of time here, came back again. All right, this looks like sellers right now are really pushing this market, because when we see market structure, market created a low here, came back to create a lower low and then a lower high. Okay, market structural information is telling you that okay, this market is selling. All right, I want to keep this thing on the beginning as much as I can without having to go into advanced concepts. It's telling that this market is selling, then you could wait for it again. The market is selling. All right, now you're looking for an opportunity to sell. You're looking for yourself an opportunity to sell. Now, the best time to sell now when the market is below this 200 moving average. Let the market come in between the 50 and the 21 or the 20 moving average. Now, the market came in, tapped in, came in again. It came in between. It gave us a very good bearish candle. This reaction, you agree with me that this reaction is a bearish candle reaction? True or false? Now, if we indeed took this trade at this point, our stop loss, this is our entry, and then our stop loss is just above this trade. Let's take this trade. Let's say we don't know what the market is doing. We're not seeing the future. Although the stop loss here is too high, what we most likely have done in this scenario is to go to the lower time frame and then fine tune our entry and pick a better trade. This is our stop loss. Or better, if we're to make the stop loss here on the previous swing high, the previous swing high is this level, okay, based on market structure. Alright, previous swing high is this level. If our stop loss was just here at this level, then we know that we're still going to have made good profits. We still won't have been taken out on this trade, because according to market structure reading, this is it. Alright, let me paint this red for you so you can know that it's actually supply, so you can know that it's actually resistant. According to market structure, higher highs characteristic feature of an uptrend, and then lower lows characteristic feature of a downtrend. When this trend line begins to change, you know that the market sentiment has changed, then you know you want to sell. Here we had ourselves, we had ourselves an uptrend, alright. The market was trending up, giving us lower high, higher high, lower high. Sorry, this is lower low. Sorry, this is a low, a high, a higher low, a lower high. We still got ourselves another higher low. Okay, the trend has not changed. Market continued, created another higher high, characteristic feature of an uptrend. And the market came here to give us a what? This was the previous low. It came to touch the previous low. This was not a break. Alright, this was not a break. This is still valid. Okay. This zone, was still valid. This zone was still valid, alright. At this point, some traders would actually take that trade at this trade and put their stop loss here. But how did this market play out? The market began to range. Now, as a true trend follower, when the market is ranging, it's actually not going in your favor. This market ranged for quite a long time, and in this ranginess, anyone that took a buy trade at this zone, targeting this level, this is a very good trade setup, alright. About 70% of the time, this trade should actually play out in your favor. But his stop loss was ultimately smashed, which is one of the times that this is actually an occurrence in the market. Sometimes we lose some trade, but with our proper risk management, we don't tend to lose a trade. In this simulation, you see where this market actually played out fine and good. So the market was ranging, as you can see, even the moving average shows that the market was ranging in this zone. Alright, we're having higher highs. This was the cross to tell us to buy. The market was in an uptrend. It came in, began to range. Ultimately, we got ourselves a breakout of this range. That breakout occurred here. Alright, we got ourselves a breakout. We can just see the breakout occurred here. We got ourselves a breakout to the downside. Plus, moreover, the moving average was telling us to sell from here. But remember what I said, when we fine tune our strategy with the moving average indicator, we don't just sell until the market is below the 200 moving average. That brought us to where we were. Now the market eventually gave us a confirmation that it's really sticking to staying below the moving average, which is here this zone. All right, this is a very good confirmation. After multiple breaks and going back, breaks and going back, the market now created this is a high, this is a low, this is a low, this is a low, this is a high. All right, this was a previous high, but this was a takeout, but then it was still not as high as this move that led to this break. All right, this is actually a supply level here. This is actually a supply level. I'm trying to keep everything basic on intermediate level. This is actually a supply level here, because this is where selling pressure began to come in. And then the moving average actually told us to sell. So hence the market has not broken this level. This market can still be said to be on a downtrend. But you don't just enter here, you want a confirmation. Let the market be trading below the 200 moving average. Here, this is not a confirmation of a break. The market came in, it still did not tap into our supply level here. It did not tap into our supply level. All right, the market did not tap into our supply level. We're still observing. The market now gave us a very good confirmed break. Let me try it out here for you. All right. Now this is where we got ourselves confirmation that this market has broken and it's actually selling. Now when you've gotten this, you now want to find yourself an entry. You got yourself an entry when the market came back to the zone. Coming back to the zone, this was a very good entry confirmation. This candle formation here is an indicator to sell. Let me change this to a little big. This is better. This was a confirmation to sell. Okay, looking at this was a sell confirmation. And what do? We just took our sell trade. All right, and we took this trade around 3 p.m. That is a standard trading time frame. All right, that was a very good time frame to take the trade. So what happened? Our stop loss will just be above. I had to go over this so you can understand how to set your proper stop loss properly. Your stop loss should be at the most significant structure. In this level, this was our good structure. This was the most recent swing low. All right, this was a low, lower low, lower high, another lower low. This is the main lower low. Then the market came to this zone. It hasn't broken this zone yet. And then at this zone, we got ourselves an entry confirmation to sell. This is where we have to put our stop loss. Now, making this stop loss safe because of the fact that it is on a 4-hour time frame, this stop loss is too huge. What we do in this scenario, we go to the lower time frame. We're currently analyzing the 4-hour time frame. We go to the 15 minutes time frame so we can get ourselves a better, smaller stop loss. All right. But for the fact that due to this level of backtesting, we cannot actually go on 15 minutes time frame at this time because of we're limited on the free version. We can only go back. We cannot go back beyond 5,000 bars. So we're limited to this. All right. So now at this point, this is our stop loss. And remember, a good trading trade, at least one is to risk and two is to reward. All right, that's just the basics. But then, even without that being said, following this moving average, you cannot just be watching the market every time. You could go back in time past to see significant level where you could move your entry or your take profit. So this is what we're willing to risk in this market, which is actually huge. And this is what we're willing to gain for take profit one. Where would be our take profit two? Take profit two will be at a good level. This is our take profit one. You can see this. Why I call this a take profit one? Looking at this was a demand level, okay? This was where we got as a very good demand push before the market began to spike high. This is what we look at to set our stop loss. Our This is what we look at to set our entries and our stop loss. Alright. This was a very good demand level. This is our demand level, okay? Demand level, we paint it to be green. We paint it to be green, yeah? This is our demand level, and this is our take profit one. And then our take profit two will be at the next demand level, which is here. This is our next demand level. Okay, the bearish candle before a bullish impulse that led to a break of structure. That is our demand level. Okay, this is our TP1 and this is our TP2. Just here, you can leave it just here. And this is the trade entry. And let us see how the market respect this trade. This is our backtesting scenario one. All right, let's see how the market react to this. Okay, now the market is playing out. You could just move it gradually. Remember, you're on a 4-hour time frame. This is like a slow trade. It's going to take a lot of time to play out. You have to be patient and wait for it. You're observing and just keep moving this forward until your TP1 is achieved before you can choose to take partial profits. Okay. Now at this point, our TP1 was achieved. Yes, let's move forward to see. Good. At this point, our take profit one was achieved, and in most case scenario, what we do is this: you move your stop loss to entry. This is what we do: we move your stop loss to entry. You take 50% of your trade. In a case whereby you open two positions, one position is targeting take profit one, second position is targeting take profit two. Now, when take profit one has been smashed, for take profit two, you simply move the stop loss to break even, and that's how you manage your trade. But then, if it was one trade entry two, you know that you will take partial profit. You close 50% of your entry, and then your stop loss will be at break even. When that is done, take profit one has been achieved. This trade is currently running in profit and yet still risk free. The only time when you will close this trade is if the moving average now should give you a crossover signal that is not in alignment with what you're trading right now, or if this market, before the market will come to break and take this previous high here, that means you're already out of the trade. All right, this is another significant high. All right, then before the market will come in there, you're already out of the trade because this is your entry already. So let us observe. This is also back testing the market. I don't know what's going to happen in the future, but we can just keep tipping it a little to see what happens. Eventually, the market took us out to break even, but not before taking, like, it came out, took us out on break even. That means our second trade, our TP2 went out on break even, but our TP1 went out in a profit. So far so good. Okay, we can call this a winning trade because of our trade management. So now let us keep observing the market to see if we can get ourselves another entry to see what the market is doing. Remember, until this level is taken out, this market is not yet telling us to buy because of market structure. All right, uptrend we're seeing lower lows. Sorry, uptrend we're seeing higher highs and higher lows. On a downtrend, we're seeing lower lows and lower highs. All right, these are just simple characteristic picture of a downtrend. Right now, this market tapped in here, but it's failed to break above this structure. So it's telling me, okay, guys, in as much as buyers push this market here, sellers are still involved. The market structure has not changed. We still got ourselves a low here, and then a lower low, and still getting ourselves a lower high here. We can just keep watching this and see what the market has. Now, this our moving average is telling us to buy at this zone, right? It's telling us to buy at this zone. But remember, our principle says we don't just buy. We want the market to break above our 200 moving average. So observing this market, this was a break. Okay, this was another candle. This is not convincing enough because this market will still at the neckline of the 200 moving average. This is, if I could get another candle ahead of it, then I could call it a proper break. But still on that, some people could still call this a break, just this and this. All right. Now let's watch and see what happens to the market. Remember, this is a resistance level. The market came in, of course, tapped into resistance, coming back. That is a tussle. We don't know who's going to win, but our moving average is telling us that most likely this market want to buy. We're still observing. Now, some people that are too quick to taking trade to take the entry here. Now, I wish we could actually go down on the 15 minutes time frame. Then we'll get more information to know if we should take this trade or not. Because looking at this seems to be a very good bullish confirming bullish engulfing candle telling us, okay, take this trade, take this trade. Over 50% of traders will take their trade, even them that are following our strategy, take their trade because of this candle. This was the break. This was another candle in the direction. The market sellers came in, but then they were not strong enough. Buyers are still here. Buyers are telling us, okay, we are very interested. But then the market structure is not telling us to buy this trade just yet. So just to be conservative, it's best to wait and see. So let's say we are waiting to see, and boom, looks like the market played out without us. If I told you were to enter this trade here, this would have given us good profits already. All right, but now right now we've confirmed that this market has broken. Remember, a resistance level, once it's broken, it begins to act as a demand level. Likewise, when a demand level, once it's broken, it most likely acts as a supply level. Another way to say it is this: a support level, when it is broken, it becomes a resistance level, and a resistance level, once it is broken, it becomes a support level. Right now, this was our resistance, or if you call it our supply level, still on market structure. The market tapped into it, it failed to break, tapped into it again, failed to break. Now tapped into it, failed to break. Buyers still push this thing, they broke it, and then after it break, it came back for a what? A break and a retest. Remember, break and retest, that is a confirmation to enter. That being said, this is no longer a bearish candle. This is no longer this is no longer a resistance or a supply level. You could call it now. You could actually call it a confirmation to buy at this zone. All right, you could take your buy trade from this zone, long trade. Remember, moving average is telling us to buy, and then we are above our 200 moving average line, and this is a very strong bullish engulfing candle. If only we could zoom on a lower time frame, you will get a better entry from here. That is not too much, all right? Because this is actually a lot, your stop loss. Now in this zone, you could make it conservative. This could be your stop loss, or you could just make it here, all right? According to market structure, all right? Here we have ourselves a high, like looking at the leg of the market movements that broke the zone. This was a lower low, all right. The market eventually came in to break and giving us a high. According to market structure, this is where we should put our stop loss. This is a very good place to put a stop loss, all right. You can put it here. All right, let's see what happens. Let's see what this trade has for us. And then where are we going to put our stop loss, our take profit? It's very important. Let's go find ourselves a take profit. This is our stop loss, which is quite huge. Our take profits all the way to this level. This is looking beautiful, but is this level going to tag? We don't know. All right, this is a good level to put your take profits. All right, so let's see. You get the analysis behind this trade. For the fact that this market is now in an uptrend, it should go and take out previous high. And where was our previous high? This was where we got a previous high. All right, so this is where we got ourselves a previous high. This is what we got ourselves a previous high. Our take profit could actually just be this, or you could even take it inside, or just anyhow you want it. But this is just very good and okay. So let's see what. But then the risk to reward ratio in this trade is not so nice. In as much as we're getting more than what we're risking, I am not comfortable with this type of trades. What I do mostly, I will go on a lower time frame to find myself a better trading entry. That is why we go lower to get ourselves a better trading entry. All right, but then for the fact that we're limited to that, let's see what happens. Remember, taking note, our first trade was profitable by take profit one, and then take profit two came back to hit break even. All right, so let's just be observing this trade. Now, what do we have here? The market came in. We are currently running on a loss currently. We're currently on a loss, and then eventually our stop loss was smashed. That's quite painful, but no problem. Our stop loss has been hit. So let's see what happens after the stop loss was hit. What is our moving average telling us? Our moving average, we are still okay. It began to tell us to sell at this zone. Now, our stop loss was hit, all right, not a problem. Now, what is market structure telling us? Market structure is still there, all right. Market structure is still there. This is another level. This is another level. All right, that could just be a liquidity hunting, trying to take people's stop loss. Unfortunately, we fell to that. This is an intermediate level training, so I want to keep it just on that basis. All right. So right now, the moving average is now telling us to look for sell opportunities. All right, looking for sell opportunity. The market's actually sold in for us. This is a break. All right, confirmed break. A very good candle. Second one, multiple candles. So this is a break. So right now we're looking for an entry. We're looking for an entry. All right, our entry we can enter now when the market comes back in between the 200, in between the 20 and the moving, in between the 20 and the 50 moving average. Also, we can call this a break and a retest right here. All right, so you can see this. I want this very clear, very clear, very clear. All right. So this is a break and a retest. All right. A retest. It came back to retest the zone. It broke the market right here. Came back for a retest, and then gave us a very good bearish engulfing candle. Still at the same time, the market tapped into the 50 and the 200 and the 20 moving average. All right. So at this zone, we're going to take ourselves a sell trade. All right. Let's just see. We don't know what will happen in the future, but that alone is telling us to take a sell trade. All right. So we take ourselves a sell trade here. This is based on intermediate training. All right, our sell trade, this could be our stop loss. All right, you could even put your stop loss here. This is a huge stop loss. This is a very huge stop loss. This is not, I am not okay with this. I wish I can go down to a lower time frame. This is huge. This is just too huge. All right, you can manage it down to this one, and let's see what happens. And then where is going to be our stop, our now, let's not push the market. What the market is telling you to do, that is what you have to do. In most cases, you just have to go on a lower time frame and find an optimum trading zone. Find yourself taking a trade with a stop loss that is not so huge. Some people would actually do this trade this way, all right? You can just put a stop loss here. And this is not bad because we got ourselves a break and a retest and then a very good entry confirmation. This is actually okay. All right, this is actually okay. This is more better. All right, then where's our take profit going to be? Remember, we can't target demand level. Here's the previous demand level here, guys. This is our previous demand level. These are previous demand level. All right. The last bullish, the last bearish impulse, the last bearish candle before a bullish impulse. All right. So this is our. Wow. I seem to have zoomed in to the picture a little too much. Okay. Just Control Z. Nothing like Control Z can't fix, right? All right. So this is where we are. This is where we are. All right. Back testing. Okay. This is the demand level here. Okay. So demand level, we have to give it a good color. It's actually this green. All right. This is a demand level. This is not actually extended. You have to get the candles weak, the wick as well. Okay, not just the body. Keep going for the wick. All right. So this is our demand level, and this is it. All right. So at this point, we're targeting to see what the market gives us. All right. So the market is trading. Here we were willing to reach 35, let's say 36 pips for the fact that we took this trade from this zone. All right. And what time was this? This is actually 2 p.m. US session. You need to notice this. What time are we finding entry with this strategy? On what currency pair? We're trading Euro USD. Remember, you want to trade when the market is volatile, when the market sessions are open. And it's beautiful by getting ourselves some entries at US session. The first trade we entered, we got it at US session. The second trade, what time was this? 17, still at US session. The third trade, what time was this candle? Yeah, still at US session. Alright, US session 2 p.m. Alright, 2 p.m. African time. It opens from 1 p.m. African time, or around that 1 p.m. to 6 p.m. African time is okay. But any trade you take after 6 p.m. African time, that is actually not a good trade. Okay, but let's just keep it on this. For this, you don't know that, you're just observing and seeing what the market has for you, so you can get enough data. Now, moving back at this, the market is going. At some point, we're going to move our stop loss to break even. Do not forget. So right now, we're willing to risk 35 pips. At this level, the market has already given us more than what we're willing to risk. You could move your stop loss to break even and then take partial profit while you wait for your TP2. Alright, if that was done, let's see what happens with this trade. Remember, taking partial profit and waiting for TP2. If that was done, the market took us actually out in break even, still in profit. The market came very close to our demand level, very close to our TP. This is quite painful, less than 10 pips, less than 10 pips away from our market, and this thing reversed. This is quite crazy. I have been in this type of situation that I told myself, if I am online and I'm watching this and the market is now giving me funny price movements, because looking at this is a very funny price movement, I was going to take my trade. But then the most likely trade, because this is actually all right. This is 6 a.m., 10 a.m. You're observing, but then anyone can be caught off guard on this. This is why you have to manage the trade. We took partial profit, we moved stop loss to break even. The market took us out on break even for TP2, but TP1 was achieved. All right. Now we're still in this trade. We are still observing. The market went in. This level has been taken out. But remember, until this level is taken out, we can still call ourselves bearish. All right. We're not looking to buy yet. And also, the market is below the moving average, the 200 moving average. So what are we seeing? What are we seeing? What are we seeing? What are we seeing? We're moving forward. All right. He told us to sell again. All right. He told us to sell again. Remember, the price is currently below, and he's telling us to sell. But then you cannot just go and take a sell blindly here. It's just too humongous. That is why we have to reduce it and go on a lower time frame. But quite unfortunately, we are not able. So we can hope for a break and a retest. We can hope for a retest. Let's see if the market gives us a retest. It didn't. All right. At this zone, like retest of this level, it never came back to test this level. It looks like we missed out on this trade because the stop loss was just going to be too much and we're not confident with that trade. Or if anyone was to take that trade, regardless of what the moving average was telling you, we were obviously going to make profits on that. But me, myself, what I like to do, which is what I advise, you just go down to the lower time frame, find a better entry and stop loss, and then set your trade from there. Okay, so now again, the market has come back to test this level, but then as it came to test this level, our moving average is already telling us to buy. All right, remember the market is still bearish, hence it has not taken over the zone. All right, let's see what happens. It's telling us to buy, yes, but we want this market to break. All right, now the market came in. This is not a confirmed break. It broke, it came down, broke again, it came down. A lot of top of war. We got a very, very good bullish engulfing candle after this moving average is telling us to buy. The market came to break, consolidated for a while, 6 a.m. in the morning, still doing what it's doing. This is now US session. Right now, you could actually take this trade from the zone, or you could wait and observe. Now the market came back again, 10 another the next day, 2 p.m. US session. The market is above the 200 moving average. Has been ranging. It has been above the 200 moving average consistently, and the 50 and the 20 moving average is telling us to buy. And we got ourselves a very good bullish engulfing candle at US session, to be precise. Okay, this is actually 10 o'clock. 10 o'clock. But let us say we got it 10 o'clock, right? We're still watching. Yeah, this is where we're going to put our stop loss, right? Our stop loss will be here. Our TP1 is just this level. Okay, this is our TP1. This is how you target the TP1 previous level, or just 50% of what, at least when you get what you're willing to risk from that trade, then you could take it to TP1. Okay, this is still on the intermediate level, supply level. And where is our TP2 going to be? Let's find ourselves a TP2. All right, TP2, we can go back to targeting this level here. All right, this is our TP2. Let's target this high here. All right, TP2. Let's see what the market does for us. Okay, TP1 is obviously smashed, as you can see here. Break even. Just observing the trade and see what the market did for us. Still at break even. Did the market take us out here on break even? Not quite. This is the crazy scenario. It came very close to our break even level, but did not take us out on break even. We're still in this trade. And eventually our break even was smashed. Alright, we are out of this trade. Alright, this is just how we backtest, okay? This is just how we backtest, alright? And I can't let us get to the point where we can get to now lower down on the lower time frame. Alright, now we're out of this trade. Now, if you look at this is a very good entry setup, guys. This is a very good entry setup. Alright, the market is at the 200 moving average. We're getting ourselves a very good bullish engulfing candle. And what else? The moving average is up above at this zone. At this zone, you just take yourself another long trade. All right, your stop loss will just be here, very conservative. All right, and your target will be at that previous target which we're still targeting. If you still go back, it's still a valid target. And then your TP1, your TP1 will most likely still be here at this high. All right, this will be your TP1 level. Okay, this will be your TP1 level. This is our TP1 level. This is our TP1 level, and this is our TP2 level. Eventually, our TP1 will smash. We move our stop loss to break even, and observing. Another entry was taken. We've not been able to hit TP2 for quite some time, but we have had more wins than we have had losses. We're still in little profits. All right. Right now, the market is still in an uptrend, and this was a gap. Usually, the market tends to come back and fill in this gap. I want to keep this thing very simple as an intermediate level trader. Right now, this 200 moving average is telling us to sell, and the market is below the 200 moving average. All right, the moving average is the 50, and the 20 is telling us to sell, and the market is what below. And then what do we have here? I believe you can see this clearly. We have ourselves a very good bearish engulfing candle, just based on what our strategy tells us. At this point, you just take yourself another sell. Okay, we take ourselves another sell. Let's see what happens. This is the sell trade, and then stop loss. I don't want this to, yeah, this is stop loss here. All right, this is huge. This is huge. Once again, if we were to reduce our time frame, we can get a better stop loss. But this is huge. Some people could actually move their stop loss here at the highest level of the moving average, or just, yeah. But this is huge. This is huge. This is not advice. You're on a 4-hour time frame and you're giving yourself a 94 pip stop loss. That is insane. That's insane. But then if you do that, you just know that you have to reduce your lot size. All right. So let's see where our, this is obviously our TP1, the low of this level. This is a good TP1, or whatever you're willing to risk, but this is the low of the level. All right. That is our TP1. And our TP2, where's our TP2 going to be? This is a good demand level we can see right here. Okay, this is how we just take our trade. In this trade is actually giving us multiple TP levels. This is TP2. Just keeping it at TP1 and TP2, that's no problem. If we're to snipe from TP3, then TP3 will just be at the low around this zone, but this is just okay. And let's paint this green. Demand. This is the demand level that pushed to this level that eventually caused the break of the structure. This is the structure. The structure eventually broke. Alright? Yeah. Okay, so what do we have here? TP1, TP2. To see what we have here. These are TP2 and boom. Alright, TP1, we move our stop loss to break even. Let's see if we're going to achieve TP2 at this trade. Alright, I'm tired of just hitting only TP1, but I thank God we have more wins than loss, so let's just keep stacking in now. Then TP1, oh, finally, our TP1 was smashed. That is beautiful. Alright, TP1, TP2 smashed in this trade. We're still moving forward. And we'll see if we can take another trade to continue. But the market at this point, okay, it's telling us to sell. It did not actually come inside our 50 and 20 moving average, and there is no confirmation to sell here. So you're just watching this trade go without you. What you do in this level, what you do in this case is you can go and look at another pair, but still related to your pair. Just stick to one pair. You don't have to trade all the time. Just observe and wait. Our TP2 has been smashed. Now the market came back inside the zone, giving us a good entry. Are we going to take this trade? Most certainly yes, because we have been waiting for a trade. This is us, not like we have been waiting for a trade. Let's see what happens. All right, you take your short position at this level. This is a very good entry, like candlestick confirmation readings. All right, it came into that zone. If we were to look at this on the 15 minutes time frame, I tell you we're going to find a very good bearish engulfing candle. And then our stop loss will just be at this level, right? Our previous stop loss level, and normally it should be at the high of this level, but then we don't want to go in for this insane stop loss anymore, right? So let's just see what happens here. And then where's our take profit going to be? Our take profit one, whatever we're going to, at least this is a good take profit one, alright? This is not so nice. One is the risk, one is the reward. In this type of trade, I am not comfortable with this trade, alright? But then we can still go down to lower time frame to still go and take profit lower and see what happens. Oh, I move this too forward. That was even a moving trade. You don't know what's going to happen. Alright, if you were to take it lower on this level, then okay, this is your TP1 and this is your TP2. What happens in this trade? This trade is running. Did we get ourselves on the TP1? Where was our TP1? Our TP1 was most likely this demand level. Alright, so if at all we were to put our TP1 on this demand level, which you have right here, alright, then would have set the trade on it. But this is a very bad trade because this is where you want to put your TP1 and this is where your stop loss is going to hit. Even though you come out on a break-even scenario, you're still going to be a loss in that trade. Because from here we're just at about 40, 50 pips, right? And then we're waiting to reach 65 pips. So this is a bad trade. A recipe for a bad trade. Alright, eventually let's see what happens with the trade. Our TP1 was not smashed by because it is where we targeted the low of this level to make it something worthwhile. And eventually our stop loss was smashed. Not rocket science. Alright. Our stop loss was smashed at this point right here this week, alright? Second stop loss we're hitting on this trade. Not too bad. Alright, our stop loss was smashed here. Here, the market is telling us to buy, but we don't just buy, we want the market to go above, alright? The same thing we're saying is let it go above the 200 moving average. Now it is above the 200 moving average at the zone, and let's see if we have ourselves an entry. So okay, this is where it's actually started telling us to buy, not here. At this zone, you will not just buy blindly. You want to still wait for better entry. Okay, this is actually July 2024. Let us see if we can get ourselves a 200 moving average. If the 15 minutes time frame can get to the zone. All right, let's see if that can happen. Then we'll get better trades from there. I'm going to July. All right, July 2024. Oh, we can't get 2024 yet, so we just have to go back to where we were. Let me see if we can use undo to get us back over here. All right, this is where we are. Subsequently, you can also use another time frame that is not necessarily a 15 minutes time frame. Since we're not getting a 15 minutes time frame in this trade, you actually either use the 1 hour or the 30 minutes time frame. Okay, this trade, the stop loss was smashed. It's telling us to buy. Let's go use 30 minutes time frame. But I doubt the 30 minutes time frame is still going to give us this. Most likely the 1 hour should, but then at least should be two time frame lower. And on the standard time frame, we have a 4 hours and then either the 30 minutes or the 15 minutes. Let's try the 30 minutes and see if it's giving us that time frame. Because in as much as we've gotten our trade buyers, but we just want to reduce our loss. We want to reduce our stop loss level, all right, on that trade. What date is this? We're not able to get there. We're just at January. All right, no problem. We just go back to where we are and keep pushing forward. Now this trade was a loss, and we're trying to see if we can get ourselves another trade. The market is telling us to buy. We're still observing, and market is going up and down, going up and down. It came down very close to this level. This is a resistance level, supply level. It came in to tap into it, came back again, and then push. Eventually, gave us a very good push, and the market broke off. And looks like we missed out on all this trade because we are looking for a very good stop loss. But a very good stop loss and entry level. But then, if at all we're just like, okay, since we've been risking it big already, and we just choose to take this trade, all right, because given we are all humans, we are just observing. You most likely will not sit down and wait for too long without taking a trade. The market is telling you to put the stop loss, and this is the entry. Stop loss is most likely giving you based on market structure. If at all we took this trade, if at all, obviously we saw it was going to be profitable anyway. We took this trade without having to wait for it to come in lower. But I tell you, if we were to go down on lower time frame, like 15 minutes time frame, right here, then we would have gotten ourselves a better trade. This is quite humongous. And where's our stop loss? Our take profit going to be? This was going to be. This is going to be our TP1. All right, TP1, and then let's see. All right, we can even ultimately move our TP2 to this one. TP2 will be here, and then TP1 will be here. All right, let me do that. These are TP1. This is a good TP1, and it's close to what we're willing to reach. And then TP2 will just be all the way here, right? This could be our TP2. Yeah, but this is the bad trade. I myself trading, I will most likely not take this trade because how much am I risking? How much am I gaining? So let's just call this trade a wash. We did not take the trade, right? We did not take the trade because we are not able to go down lower on a lower time frame. So let's say that trade ran out without us, and right now the market came back a very good tap into our zone. And then what do we have here? The market is not telling us this wants to sell, but we're still observing to see. Remember, this market is not telling us it's not trade, and boom, it broke. This is not a confirmed break. It still came back in. After it came back in, it gave us a good entry to buy. Right now, the market is above. We have ourselves our entry, and at this zone, seeing that we did not take that previous trade, and you have yourself the market is above the entry, it's above the 200 moving average, this is still another crazy trade. But most likely, we are not taking this trade because we will obviously go on a lower time frame and get ourselves a better entry. All right, this is your TP. You're willing to reach this, and this is your willing to reach this. Your TP1, where's your TP1 going to be? We go back to the past to see our TP levels. All right. Okay, so if we were to go back to the past, this is going to be let's just in this case okay, these are our all-time TP, all right. These are our TP. All right, this is also why I'm expecting the market to give to us from this level, all right, a resistance level from the past. Okay, all right, so let's see what the market has for us. Remember, we don't quite know what the market is going to do, but we're just observing to see. Still ranging at this point. Okay, let's keep zooming it forward. When the market came in already at this zone, we've already gotten more than what we're willing to risk. So we take partial profit and move our stop loss to break even. Alright? And then let's see what is going to happen for our TP2. The market is still running and eventually our TP will start. So this is another trade that we got hit our TP1 and TP2. So and our TP will start. So right now we just keep observing waiting for another trade. Right now the market is ranging, not like ranging, higher high, it has to create another higher low, right? So we're still observing. We don't know when this will end, but this guy told us to sell. Remember, we don't just sell blindly. If we're to sell blindly, this trade would have been a loss. We're still watching. Now he's telling us to buy. And for the fact that we are in an uptrend, we are above the 200 moving average. The market is telling us to buy. Another entry confirmation I see here is the bullish engulfing candle we see here right now. Alright, so we have three confluence to take this trade, three reasons to take this trade. The fact that we are trading above the 200 moving average, the fact that our crossover signals are telling us to buy. So let's say we got it here, we might just have taken our trade here, alright, and then our stop loss will be here, okay. This is your stop loss and your take profit one. Previous structure. These are take profit one, okay. Previous structure, and then take profit two. Let's look at take profit two. Okay, take profit two right now is actually open stream. Actually, very far. Like these are take profit two. Let's see what the market has for us. Right, anything is possible in trading. Let's try this right here and see. All right, that's our take profit two. All right, so let's see if the market should just tap into our take profit two. Remember, we keep managing our trade. Whenever we get what we're willing to risk, at least what we're willing to risk for stop loss or our take one is achieved, we take partial profits and move stop loss to break even. So let's see what we have here. Remember, this is our take profit one level. This level was never tapped in. We're still observing. Came in profits, came close to our TP1, but it did not tap our TP1. This is our TP1 right here. It came very close, but it did not tap it. So we're still observing and is our TP1 taking yet? Let's see. Yes, our TP1 is eventually taking, and at this zone, we move our stop loss to break even. We're taking partial profits on this trade, and we're observing to see what happens. And boom, the market took us out eventually, and that is it with trading. At least we've taken a lot of partial profits on this trade. That is crazy. All right, so that is it for backtesting. This session is already 50 minutes long. Sir, can you hear me, please? Let me know I'm not just talking to myself. Hello, Mr. Joseph. Can you hear me? Hello. I know that I am recording this session, but I need to know that we're actually following. All right, I'll carry on since this trade is recorded. So that's what how we backtest, and still moving forward. The market now tells us to sell, but we don't just sell. We want to see some confirmation of the market breaks the 200 moving average. All right, it has ranged in there for quite some time. This is a we could actually take a trade from this zone and let's see what happens. But then again, this is not a good type of trade. It's actually very off. Stop loss is just too crazy, right? This is stop loss here, and then our target, we have to target fast to see. All right, so this is what we have for target. This is our target demand level. All right, that's our TP1, and then our TP2 will just be at this zone. So let's see if the market comes in going up for us. Not. So this could just be okay. TP1, TP2. All right. So let's see what the market has for us. Let me zoom this in a little. All right. So what do we have here? Market is ranging. Okay, at this point, our TP1 has been smashed. We move stop loss to break even. Our TP1 has been smashed. Yeah, just with a week. All right, with a week. We move stop loss to break even, and let's see what happens. There again. Okay, okay. Are we going to get TP2 on this trade, guys? We don't know yet, right? But let's just see what happens. I still here and observing. This is a lot because this is on a 4-hour time frame. Remember, you make your analysis on a high time frame and you take your entry on a lower time frame. All right. Okay, the markets. This is beautiful. Now the impatient would have left the trade a long time ago, but then eventually the market came into selling massively and tagged us on our take profit too. Now let us go with this information we have, all right? With this little information we have, let us count how profitable the signal was, all right? On our first trade, this is our first trade. Our first trade was a winning trade, all right? A winning trade. Let me say this first trade was a winning trade, all right? TP1 was smashed. Second trade was a losing trade. Third trade, TP1 was smashed, all right? Third trade, fourth trade, let's see. Fourth trade, TP1 was smashed. Fifth trade, TP1 was smashed. That means we've had, no. How many trades we have so far? One, two, three, four, five. Okay, five, all right? Five out of five trades, we've had four winning trades and one losing trade. All right, still moving forward now. Six, TP2 was smashed. Beautiful. We've had how many? Let's just count it this way: one, two, three, four, five, six, seven. All right, seven trades. Seven, eight, nine, 10. All right. Out of 10 trades, how many losses did we take on this trade? We took two, one, two. Wow, that was pretty good. Two losses. We took just two losses on this trade. So out of 10 trades we took, within a span of how long was the first entry? From January 24th, 2024 um, till November 24th. Wow, that's quite auspicious. No, that's not 24th. Okay, 5th of November 2024. That's over April, May, June, July, August, September, October, November, December. Okay, November. That's like 8 months of data. We got 8 months of data. Out of these 8 months, 10 trades we took, two was a loss, eight were winning trade. That is a profitable strategy, and that's how we backtest. And if you check out your entry, most of our entry was aligning around US session. All right, just aligning just you don't trade Asian session because you're trading Euro USD, so you want to trade around Euro session and US session because this is your currency pair. All right, so we have the first trade we took it at 10 a.m. All right, 10 a.m. That was the last trade. Okay? We're just observing the time frames. This one was 6 a.m. You most likely might have been sleeping at this zone. All right, but let's say you missed this trade, you got yourself another good entry from this zone, and this was still another 6 a.m. Still miss this trade, miss this trade, most likely took this one. Okay, let us say we took this trade 6 a.m. Alright, that's most unlikely. Alright, but then based on our back testing, if you were not awake 6 p.m., you obviously missed that trade. But then if you were able to look on a lower time frame, I tell you, you would have gotten another trade entry from that zone. Another time from the time you were awake. Alright. Now this trade, we took this trade one time, 2 a.m. Obviously, we did not take this trade because you actually sleep in 2 a.m. No one is going to be awake 2 a.m. All right, so let's see what happens as we woke up in the morning. As we woke up in the morning, let's just see if at all we really took this trade. And this is how you get your back testing figures. So this is a very good bullish engulfing candle. Let's say we took the trade at that zone. And what time was that? This is okay, beautiful. 2 p.m. US session. We took this trade at this zone. It's still what we're looking at. These are things you look at when you're back testing. This trade now that went in a loss, what time was this? All right, morning 6 a.m. to 2 p.m. We took this trade. Obviously, I look at that zone. Here, what time? 6 p.m. Remember, I told you whenever you trade. Okay, here it was 6. Okay, not exactly 6 p.m. Okay, 6 p.m. All right, not beyond that. Let's say we took this trade because it was not beyond 6 p.m. This is the candle that drive, and this is 4 hours. This previous candle was from 2 o'clock. All right, from 2 o'clock to 6 p.m. the bearish candle, and at the close of the bearish candle, we took our trade, and then we see what happened with the trade. Eventually, we got ourselves. Yeah, it 2 trade was still all right. What else? What other trade do you have here? Here was a very good trade. What time? 6 a.m. Now, from this back test we've done, that means you have to set your alarm 6 a.m. and just be able to take your trade because there were some trade entries that came in 6 a.m. This is how you get your data. Now, the next trade was what time? We took this trade 10 a.m. All right, 10 a.m. The next trade before that, what time was this? 2 p.m. Now, this trade that we took that was a losing trade, it was not that the time was bad, it was just the analysis. All right. This trade was a loss. We took that trade at 15 p.m., like 3 p.m. All right. Now, the first trade we took as we began to be back that was 3 p.m. Now, looking at this is how you get yourself in delta. So, I believe from this session, you've learned how to backtest. and how to collect data, the times you're entering this trade, how you're managing your trade. Remember how you manage your trade. When you've gotten at least your take profit one, you move your stop loss to break even and you take partial profit if it's only one trade. But if it's two trades, it's two. Without saying, like, when I say two trade, if you're risking on a $5,000 account, for example, you're risking 1% of trade. 1% is 50 USD. So in this case, you took a trade on, and let me see, your stop loss is 50 pips. You will take that trade on 0.10 lot size. So if 50 pips is achieved, then your stop loss is taken out. You can divide it. You can take two trades, 0.05, 0.05. Two. One is targeting TP1, one is targeting TP2. When TP1 has been smashed, automatically that trade is closed off for you, and then you move your stop loss to break even for your TP2. But then if it is just one trade, when you see the market has gotten into your TP1 level, you take partial profit, 50% of your lot size, you close it. If you don't know how to take partial profit, you can just let me know. We have a video on our YouTube channel on how to take partial profits. I can just share that with you. And then you move your stop loss to break even. So that being said, with the analysis that we have here, we took ourselves some trade, and out of 10 trades, 8 trades were profitable. If that is to be measured, that is already 80% win rate support of this trade. Then this strategy, as I said, when done rightly, on average, it gives you the 40% win rate. This video was quite lengthy, but I hope you found some value with it. And I'll be ending. Do you have anything to say to add before I end this session, sir?
Yeah, yes, sir.
All right. Did you get everything I shared with
So,
you?
yes, sir.
All right.
Yes, sir.
So do you need the recording? Were you online all throughout this session, or did you miss out at some point?
Yeah, I actually missed at some point, but I was online, sir.
All
But
right.
just to do something.
So with what we shared, you learned something today, right?
Yes, sir.
So this concluded the model 7 that I did not give to you. But then I will still find a way to give you the recording of this video. It is 1 hour long. That's crazy insane. But then you could watch it and there could be something you already recorded it on your side. That's beautiful. All right.
No, it stopped at some point.
Okay, I will send you mine then. I will send you mine then. After the recording, you view it and then you can ask me the question you did not ask before now. All right.
Yes, sir.
All right. Thank you so much for your time. Let me get on with something else right now. And remember, now you will still backtest these things I have done on my own yourself. And then you can now send me the
So,
information just the way we had this. We had 10 trades, all right, from January to November 2024. On the 4 hour time frame, we had 10 trades. Out of these 10 trades, you give me the information, I want to see it. Right? Out of these 10 trades, if I minimize my screen, you can see them here. We can all count them together. Out of these 10 trades, right? Out of these 10 trades, we see we had only 2 losses and 8 wins. All right. I need this
yes,
information.
sir.
You can even go as far as telling the time frame you took the trades. This is how you backtest. Then after you've mastered and honed backtesting, then you forward test it on demo with a small account. You forward test it on demo, trade it where you're going to trade your own account. If you're still profitable within that on that demo, all right, just like 30 days at least. Then the next thing you do, you fund a little account and then you try it out. You should still be profitable if you do that work. Then you can now scale up. But I'm here to mentor and guide you every step of the way. So you're not alone in this journey. All right.
Yes, sir.
And that is by the way. At the same time, you can still leverage on my signals, all right, and still be making money while you're learning. Okay. On a separate account. All right.
Yes, sir.
All right.
So, sir, yeah, I have a question.
Yes, I'm listening.
Are the moving average on TradingView free also, or do we have to pay for
It
the
is it
moving
is
average?
free. In this my daily indicator tab, you see, I just search for 3 SMMA moving average. I just went for an indicator that has 3 moving average inside it. Look at it here. 3S, okay, it's called it 3 smooth moving average by Hamid Shafi. All right, you can just search it, style it up. If you click on it, it will show you 3. Then you can now go and change it. Look at, I went into setting. I made the short one to be 21, the second one to be 50, and the longest one to be 200. All right, this is just what we did. Okay, it is free. With this style of indicator, whereby an indicator has 3 moving average, you can have multiple indicators. Look at this now. We have 2 indicators on this chart. We have 2 indicators here. This is session breaks. It shows me when Asian session ends and when London session ends, all this type of thing. I need to reload the chart for it to kick in. All right, but you can have multiple indicators. If you have just one indicator that is showing you 3 things, this is how you can break it or hack TradingView. Okay.
Okay.
All right. So I need to move on to jump into something else. All right.
Okay.
All right then.
So,
Have a great day,
sir,
now. I'm listening.
yeah. So, when will you be joining the community?
When will you be joining the community?
Yeah.
All right. Like right now, you're already on the channel, right? Our WhatsApp channel.
Yeah.
All you need to do, have your funded account hot under hot forex. Tell me you funded your account, and then you just be trading with us. I'm already dropping signals there already for you. Okay.
Okay.
Yes. For now, I post VIP all this month of June. I told them I'm giving everybody free. So the VIPs are actually on the channel. So as I'm dropping the trade on the channel, just be picking the trade. You can monitor the trade. By God's mercy, we have been doing well on the channel. All right.
Okay, sir.
All right. So if you have any question, please and please don't hesitate to ask me. Okay.
Yes, sir.
Thank you.
Yeah.
And if you want my immediate attention, you can always call me. Even though I don't pick, I will see it as a priority list of message to check. Okay.
Oh,
All
yes,
right.
sir.
Thank you, sir.
Thank you so much, sir.
Welcome.